Hey folks, Anthony Special here with Hawkeye Traders. Hope you're having a wonderful day. Want to break down a breakdown, right? I mean, sounds kind of ironic, but that's what we're going to talk about. We're going to talk about price breaking through a prior low, what that looks like, how to confirm it, utilizing the Hawkeye volume so that you can, with a greater deal of certainty, say, you know what? I feel like there's validity to this breakdown, or I feel like, this may not be the setup for me. So I want to tell you what I like to see when price breaks through a prior level of support, and inversely, guys, a prior level of resistance. Okay, I'm going to show you exactly what that is, how you can confirm your trades, because I think it's super important. All right, so what we're taking a look at here is a 3-minute intraday chart of light sweet crude oil futures. Now, you can apply this to any chart on any time frame, so don't feel like this is unique to crude. It's not unique to 3 minutes. It's not unique to anything, right? The theory is exactly the same no matter what you're trading. Stocks, futures, forex, cryptocurrencies, day trading, swing trading, position trading. It's irrelevant, okay? So this is a significant prior low here, right? You can see price did what? It came in, buyer stepped in, and price reversed. So we know, right, in theory, that at this area, buyers were more aggressive than sellers, and that's what drove price back here to the upside. So it's important to identify this particular low as an area of concern, right? Like if the market's going lower and we're re-approaching this area, we kind of want to be a little concerned because there's always a risk of a double bottom, a risk of a failed breakdown, right? And then the price turns around and goes back higher. It's pretty obvious, without me having to get too terribly creative here, that we can see that the highs are doing what, right? Like the highs are doing what? They're going down. Right? So that tells me what? Like we have a bias here to what direction? Bias here to the downside. Okay. Now you guys are gonna go, oh, but you cut the wicks. Listen. Trend line represents an area. As soon as you know how to draw one properly, which I'll do that in another video because I know some people struggle with that and they have a little bit of a hard time. Trend line is designed to identify a direction or a specific area. And very quickly, I'll cover this. Note we have a high here, and it's the trend line's validity comes in the form of how many times it was touched, right? So creation, 1, 2, 3, 4 times. Okay, so this line is composed of 5 touches. 5 touches. That's significant, all right? So that tells me, hey, Mr. and Mrs. Trader, I better start thinking along the lines that price is going to go lower. And even if we don't have amazing follow through right away, we could still pop up and retest this resistance. But we did have amazing follow through right away. All right, and how did we know that? So you get this nice big full candle here, right? Selling candle that comes through. Right? Where does the candle close? I would say it closes in probably the bottom 15%, 10, 12%, something like that. So over the entire range of this specific candle right here, price did close, fairly close to its low. All right. So this is our breakdown. Right? Now I want to look at the confirmation. Right? This is something so many traders are skipping, and I really wish they wouldn't because it genuinely becomes so easy. Right? Many of you are looking for this holy grail magical indicator. Let me tell you something. You know who the holy grail magical indicator is? You are. Right? It stares you back in the mirror. You have to be the trader that understands the interaction between volume and price action, right? The Hawkeye tools make that extraordinarily easy. I want you to notice exactly what the selling volume is doing as this move is happening, right? It's continuing to increase. Right? So that tells me, as we're coming through this breakdown, that there's more aggressive selling interest than there is buying interest. What does that mean? Well, the market doesn't move because there's an imbalance of buyers or sellers, right? A lot of people don't understand that. The market moves based on, is there more aggression from buyers or sellers, right? They leave out that aggression word because aggression is ultimately the only thing that moves the market, right? Buyers and sellers can transact all day. If one side of the party is not willing to be aggressive, and I'll get into another video what that means, then the market's not going to move. It's just going to stay stagnant, basically, right? So we take this breakdown, right, on increasing selling volume, right? This whole push here off the trend line is on increasing selling volume. That, to me, adds validity to the aggression of the sellers. Boom, we break down, okay? Now, I want you to notice this candle right here. Look at all that selling volume, or buying volume, rather. Right? Look at that huge, big, ultra-high buying volume. Was this candle able to push back through what was previously support, now known as resistance? No. Probably what happened here is either there was a bunch of profit taking, short covering, or a whole bunch of stops got hit, right? And that's what caused this surge in buying volume. Notice how small this candle is. That tells me, well, if we're unsuccessful here in getting through this area that we now recognize as resistance, excuse me, guys, we're not gonna be able to go higher. We're not gonna be able to recover here. In fact, we're gonna go lower. Think that went a little bit lower? Of course it did. And it was confirmed because of what happened specifically at the breakdown. At the breakdown, we had an increasing interest in selling aggression. From that breakdown, okay, to call that low a day, got 155 ticks. Okay. That's $1,550 per contract. It's a lot of money in a couple hours, right? But it all comes down to understanding. A lot of people get scared, right? They see a break of the prior low. They go, oh, the market's going to reverse. I'm scared. I can't get short here. It's at the low of the day. I can't. But you can if you understand why, right? If you understand what's happening in this breakdown, right? This breakdown here, if you understand exactly what's happening in this breakdown, it's very easy to be able to say, all right, I understand what's happening. I'm trying to get my little circle here to draw. I understand. That's not what I wanted. Let's see. There we go. That's what I'm looking for. I understand exactly what's happening right there. And that gives me the confidence to say, as long as price is unsuccessful in retaking what should now be considered resistance, the market's gonna, or at least should for some period of time, until buyers begin to out-aggressively weigh the sellers, continue down, okay? So there's buying along the way, which is what? Anticipated, right? Because you're short covering. But on your impulses, you see what? You see increases of selling. That's what you want to see as the market continues to make a directional move, right? As a market impulses and corrects, so should the primary volume, right? The primary control volume. And guys, that's how it's done, all right? That's how you identify a breakdown with a great deal of certainty. And inversely, if it was a breakout to the upside, same thing you'd be doing, looking for identical price-volume relationship, all right? Now, you may go, but any volume will show me, these impulses and whatnot. Correct. Not every volume, I shouldn't say not every, that I'm aware of, right? There are no other volume-based programs that are going to show you who's being aggressive, right? You have to know who the aggressor is in order to understand the relationship between volume and price action. What do the Hawkeye tools provide? They provide to you who the aggressive party is within each candle, right? So if there's aggressive buyers, you're going to see green candle bars down here, green volume bars down here, and you're going to see green candle bars up here, right? If there's aggressive sellers, you're going to see red volume bars down here and red candles up here. It's going to tell you, without having to go too far, without having to look at 30,000 million different things, who is in control because of who is being aggressive, right? Again, there's no imbalance between buyers and sellers. At the end of the day, right, at the end of every session, in order for a contract to be bought or sold, or a share of a stock to be bought or sold, there has to be somebody taking the other side of the order. I can't buy one contract of crude without somebody being willing to sell me one contract of crude, right? I can't buy one stock of Apple without somebody being willing to sell me one stock of Apple. So that's what it comes down to, guys. Hawkeye Volume is going to tell you who the aggressor is, when, where, and why, so that you can make the absolute best decisions for yourself. As you can see, if I remove the drawings from my screen, what am I left with? Not much, right? Just volume and price action. Why? Because that's all that matters. Then all I got to do is go, I can do a little basic analysis, very basic here, right? I drew 2 lines, I drew a circle, and that's it. One trend line, one horizontal line. I was able to identify all the impulses here, right? And then what do we get here at the end of the day? We get what's called a volume climax. And I want you to notice something. The Hawkeye wide bar prints, and we never close lower through the balance of the trading period. That's how it's done, guys. So what I'd like to do next is invite you to join me in a training webinar. I'm going to put a link directly below this video. Click on it, consume the content, reach out with any questions you have. Myself, my team will help you get up and running. I'd like to get the indicators populating on your charting platform. They work on TradeStation, NinjaTrader, TradingView, MetaTrader. I'd like for you to have access to the Hawkeye Volume Mastery Series. This way you can start understanding these concepts, learning at your own pace, start watching the market in real time, starting to get an understanding of what this relationship is, when, where, why it's transpiring, so that you can then build actionable plans around it. All right, guys? This was as simple as a break of a prior low. That's it. It's the break of the session low. That's the entire strategy, right? Break of the session low. Does the volume confirm it? It does. Great. I am interested in shorting this market. I am interested in allowing this line, right, this prior low, to now become newly appointed resistance. If price pushes back above it and closes back above it, this would be then considered a failed breakdown. But it wasn't, because price never pushed back above it and the market just pushed straight lower. So hope you guys enjoyed this video. Look forward to seeing you in the trading webinar. And if I can help you in any way, of course, do not hesitate to reach out. God bless and have a beautiful